People, we've got problems. The Supreme Court struck down President Trump's tariffs. $175 billion in refunds are about to blow a hole in the federal budget. The national debt's at $38 trillion, climbing $6 billion a day. And Congress passed the most expensive bill in modern history, the big, beautiful bill. The AI trade that's been carrying the whole market, we've talked about it. Leverage beyond anything we've seen since the dot-com era. Office loan defaults just past 2008 levels. The labor market's cracking. $900 billion in real estate assets debt come due this year. There's a lot to talk about. Let's get into it. Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go Beyond the Trade.
Beyond the Trade is for educational entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions.
Well, today you've got a very special treat. You don't have to hear my good friend Mike talking to his nice mic and ramble on about the Bears. You've got just me. And I think that there's some exciting things to talk about. As you can see on the screen for those watching, I've got some artwork done. I hope you like my artwork, and I've got a nice little question mark going. But there's so much to talk about. We've got problems, okay? And I don't think we've done a good enough job painting the bear case. I think that there's a really realistic bear case here. I like to be a permabull. I want to be a permabull, but I cannot help but see what's going on. And there's way too much to talk about. I talked about a little bit in the intro, but I'm going to do my best to cover a lot of this. Again, I'm not a professional in any of this. It's just worth putting everything onto a single canvas for everybody to just gnaw on, right? That's the whole point here. So much on my mind. Mike won't let me talk about the bear case, so we're going to do it here. First of all, my heart and condolences go out to anyone who was a victim today in my hometown, Austin's unfortunate events, a mass shooting downtown. My prayers and my heart goes out to all families involved. We've got problems. Geopolitics, first one I want to talk about. We're meddling. The United States is meddling in places I don't really honestly know why. Whether it's Venezuela, whether it's Iran, the United States is meddling. The market hates uncertainty, right? That's the main thing that the market hates. And you can tell. This I've got QQQ on the screen here, the old NASDAQ. I mean, it's refusing to make new highs. And I know I've talked about this, and I've referred back to this looking much like the beginning of Trump's presidency back at the beginning of 2025. From November of 24 to January of 25, it really made this same pattern. In fact, it's almost the exact same pattern. And I said that this was possible. If you go back, I don't even know how many episodes. I had this part circled, same exact dates, really. It's it's almost uncanny. We'll see. This is all a guess, again. But the geopolitical tensions are not good, period. A lot of people say, war is positive for the economy. Yes, and in the long run, the math does say that. But when you think back to the last war-ish news, it wasn't really us in the war, but kind of as a proxy, I guess, whatever. We were fighting, the Ukraine-Russia war, which started around 22, 23, and that kind of happened in tandem with our other economic issues, right? With our high inflation, raising rates, like it all happened at the same time. But if you were trading back then, you remember it was just kind of things may gap down and then run up during the middle of the day and then just fail all the way down towards the end of the day and then get cascading, candles all the way down. Market lost 30-something%. And even in the last bear market rally from July 22 to August of 22, market gains 20%. And then in the next couple of months, it goes down 20%, right? So I think that volatility is not over. I think it's yet to be seen, especially, I've got a 13-day chart pulled up here. This is just one that I thought looked good. Sometimes I like to use different intervals that are not the normal, daily, weekly intervals, just to see, because the market can take a different shape based on how you portray it. I think it's very important to look at all different time frames because it's the same data, right? It's the same data, and I want to make sure that I'm not trying to paint my views onto the chart. I'm trying to get the chart to paint its views onto me, and the chart's always, and the market is always right. We need to be the observers, not the ones trying to force our thesis onto it. You don't want to get bagged by bias. So, anyways, geopolitical tensions, not good. That's just in general not good. The tariffs, okay. I'm not a professional on this, but this is fresh, right? At the end of February, pretty much, the Supreme Court ruled that President Trump can't impose these tariffs and struck down the legal foundation for his entire agenda. And it's going to be about $175 billion in refunds that they have to come from somewhere, right? And Trump immediately pivoted and used a different section of the Trade Act to impose a 10% temporary surcharge on all imports, but that expires on July 24th of this year, is only 150 days unless Congress extends it. So this is all these trade deals that are being negotiated are on shaky legal ground. So we don't know what's going to come out of that, right? And then this brings me to the national debt, which is just entirely unsustainable. I could do an entire episode on just the national debt. And first of all, Trump campaigned on lowering, and I believe he said even eliminating eventually the national debt. Okay. But that's not what actually happened. He campaigned on that. And then the debt was already at 38 something $trillion before the bill. And now, in the big beautiful bill, it's going to add about $4.1 trillion, 700 billion of that being interest just on the debt to the debt ceiling, and putting us at about $41 trillion in debt after this. So, and it could be up to $5 trillion just from this, and so. Raising the debt limit by $5 trillion is not at all what was promised at all. And people are right to be concerned about this, right? There's really no plan right now at all for reducing this. And you can see it in the weakening of the dollar. I mean, if you go to the DXY, which is the dollar index, and the dollar against other currencies, it is down to kind of a back near the lows in January. It actually reached below June 25 numbers, back down to lows not seen since 2021. So the dollar has taken a beating recently, which also can impact our companies, right? In the stock market, of course, because of exchange rates. So again, I'm not a professional in this, but the debt, I mean, it bothered me and it bothers me when somebody says something and then does the complete opposite, right? So we kind of got fooled there. Anyways, a lot of debt, and I think there's no plan of taking care of it. I've mentioned this a couple times also. I think the Epstein files are far from done. I don't consider myself a conspiracy theorist, but if you're a trader in any sense, you have a degree of superstition, and I think it went from what Epstein files don't even exist, right? They don't exist. There's no such thing, to okay, then there's a bipartisan bill to actually make the government put them out, right? Or make things get declassified or whatever. Yeah, it turns out there are Epstein files. Shocker, I know there are. I don't know why Pam Bondi came out and said that there wasn't. And so now we just keep seeing worse and worse stuff. I mean, this is evil stuff. Evil. And it's all legit. And you have to know, I mean, you have to just wonder, if this is what they're declassifying, there has got to be so much worse. So, and I think that there's again a lot of political figures on both sides of the aisle that are caught up in this, and it's really, I think it could shake us. Now, if I pivot a little bit more towards stocks, there have been good earnings, objectively, I'd say strong earnings, but awful reactions to pretty much everything. I mean, you have, I'll paint a picture. Semiconductors, very, very strong. I know this chart looks like a barcode, but I mean, AMD had pretty solid earnings. Just, I don't know specific numbers, but drops 20%. And this is a stock that just got $100 billion deal from Meta, apparently. So there's, and then you go to Nvidia, right? Biggest, most important earnings in the entire market. And then you look, highest volume day following earnings, big sell candle, minus 5.5%. Okay, the day after earnings, that's the highest volume number day. Sorry, since May of 2025. So almost a year. And that was after earnings as well. But this one was straight down. And when you see a straight down candle with very, very high volume, not great. And it's interesting to see, though, that the November earnings from Nvidia actually almost went from pretty much the same spot to the same spot. Nvidia went from 196 to 180, except that day, that time it happened in a singular day. It's interesting that pretty much exact same range got covered. Probably a predictable thing. Usually when things run up into earnings and there's high expectations, these things don't pan out as well because expectations are so high. I mean, you don't have to be a freaking genius to figure that out. But yeah, so that's not good for the entire AI sector. Also, I'm calling this, but I had some AMD puts that I was pretty convicted on, although the AMD puts are really expensive. And I thought, okay, now AMD is really just trying to take market share from NVIDIA on all this chip stuff. And so back in the day, a few years ago, AMD or Intel would respond in many senses. It's kind of a joke with trading friends. Like Intel would respond negatively no matter what AMD reported on their earnings because they're competitors, right? Not so much anymore. But if AMD did well, that's bad for Intel because it means that AMD is that their competitor is doing well and taking more market share. And if AMD reports bad, it means the whole industry is doing bad and they probably guided bad. And so Intel's going to go down, right? So I thought the same thing here with NVIDIA earnings. No matter what NVIDIA reports, I think AMD is going to go down. And that's because of the same exact theory. If NVIDIA does good, it means that their guidance is probably higher. They're probably taking more market share away from AMD's already limited market share. And then second, if NVIDIA does bad, then AMD is going to fall because it would be considered a whole market or industry weakness. So you look at February 26th, what did AMD do? It was down 3.5% and went down more the next day. So I didn't hold those, but honestly, I wouldn't have made much more money because the IV was pretty high and they were very expensive. You'll notice contracts are getting a lot more expensive. VIX is creeping up into the 20s, at least intraday. This is a daily chart. VIX is making, it's an interesting trend. It's certainly an uptrend on VIX. And usually when you see an uptrend like this, there's going to be a climax at some point. And I mean, you look back throughout all of history and all of history, but recent history, there's going to be some sort of big jump. I can see it. I don't know. It's not guaranteed. Nothing's ever guaranteed. It just looks like a strong uptrend. And I noticed the contract price changes. I mean, things feel really expensive. So be careful when you're trading options. Just know that you're paying a higher price than usual. Next, good earnings, bad reactions it's just a sign that, and the one of the biggest thing I would really say is the market is refusing to. It's rejected all-time highs a number of times, right? And I think I've explained this in a past episode, but I'll explain it again. When the market came up, made a very close to a new all-time high up here, got quickly rejected, and came down and then actually broke through a support level, which then became resistance at 618, which I predicted last week. I said we were going to probably rally up a little bit to 617, 618. There was a little volume gap here, and then fall. Now, I'm just telling you, I think that this is kind of a rollover type of situation. It's like if the Nasdaq, if QQQ can't break back above 617, then there's going to be an issue, and I do think that we will take a little reversal here. I think we're going to head back down and potentially head towards 540. Again, maybe totally wrong, but there needs to be a really strong catalyst. There needs to be some sort of big catalyst to get it up and squeeze these shorts out. I just don't, and that could have been NVIDIA's earnings, right? That could have been earnings, and I keep looking for something that's going to push us back up, and this happens, right? The market starts to feel the weight of concern, right? Everybody starts to feel the weight of concern, and what do I do with my money? It's just sitting there in stocks that are not going up, and you only feel that relief once a big catalyst gets us going back in the uptrend direction, right? We cannot make new highs. You look at the S&P. It did attempt to make new highs. Didn't. I mean, we haven't made new highs since January, but it just feels off this time. It feels like distribution this time. May take a while, but this has been a pretty ugly range trade. Since October, it's been awful to trade. Anyways, the AI CapEx, another huge area of concern, right? There's God knows how much committed in billions and billions of dollars in this circular financing with NVIDIA, CoreWeave, AMD, all of it. I love a lot of these stocks long term, but the problem is whenever these companies guide for a lot more CapEx, I mean, they're trying to get their share of the AI pie. I mean, you look at Amazon, they've got the biggest share out of anyone in Anthropic, who is objectively winning, and I'm going to get to that, in the AI win or the AI party or whatever, and then the stock drops 5% in 2 consecutive days. It's all about the CapEx. And to be honest with you, even Google looks weak, which a lot of people are. I mean, obviously Google is a smart thing to be in because Warren Buffett's in it, but it was a lot smarter back on 150 when we were talking about it. I mean, I could see a little pullback. It would be interesting to see Warren Buffett's trade not pan out immediately, but I mean, I think this is a great one to buy when the whole market does pull back, because it just Google is in control of everything. I think 250, if you see kind of a head and shoulders on Google a little bit, if it fails 330, it probably comes down to 250, and you can grab some shares there. I see this one as a rocket ship after any kind of dip. Who knows? I mean, again, maybe this is all just me talking to myself and wringing my hands for no reason. And honestly, I would prefer that. And maybe I just sound like an idiot, but I don't think I do. I think there's a lot of reasons to be concerned, and none of the potential catalysts have really panned out. That's the problem. I thought NVIDIA earnings could do it, and because people thought it could do it, the expectations were too high. They weren't met. They failed. The CapEx, right? Every company gets punished. All these tech companies are getting punished because they're putting out all this money in CapEx. Fair enough. And the problem is that other companies down the line are relying on this revenue, right? And let's just say, what about somebody pulling back their commitments, right? This could be on chip purchases. This could be on data center lease. This could be anything, right? These AI CapEx numbers, all of this demand, it is just numbers right now. I mean, a lot of these contracts go 5, 10, 15 years out, right? Even for the data centers and stuff. And a lot of stuff there may be construction commitments for things that haven't even been built. what if supply for all of this meets a demand a lot quicker than people think, or people realize that there's just not as much profit as once thought in their different investments, and so they just throw their hands up and wave the white towel. It's very possible, and it's gonna be a sequence, right? There's gonna be one whistleblower, and then everyone's gonna do it, right? I don't consider this week's news of Block, formerly Square, and Jack Dorsey, laying off thousands of people. I think a lot of people thought too much into that headline. He mass hired, I think I saw a stat that from 2019 to now, they went from 2,000 employees to 11,000. Now they're back to 6,000. I think that's probably still a lot of employees. So anyways, my heart goes out to anyone who was affected by that too. And I hope you figure something out soon. Layoffs are no joke, and they are bullish for the stock, which is kind of silly. But it is true. I mean, less cost, and AI is really capable of fixing a lot of this. And it's where I get to the whole battle on OpenAI versus Anthropic, right? And Anthropic is, I use Claude. I've used all of them. I use Claude. I use Claude Code. Not to be confused with OpenClaw, which I've talked about, which of course has many vulnerabilities. Never do OpenClaw on your personal computer. I have a Mac Mini that I've devoted purely to OpenClaw. It's basically just a software, open source software where you can turn your computer into an agent. But the thing is a lot of this stuff is able to be done by Claude. Problem with Claude is you have to really have the $100 a month subscription, the max subscription, because if you use the $20 on ChatGPT pretty much gets you unlimited usage. On Claude, it gets you a few questions, and God forbid you put an Excel file in there, you're cooked. Your allocation of tokens usage is evaporated, and you have to wait 6 hours. Right? There needs to be kind of a middle ground. Maybe it's $39.99. I don't know. If they know what they're doing, they're smarter than me. So I just think, and I have the Max one. I'm fortunate enough to have that, and it's very, very powerful, right? In Claude Code, you can pretty much whip up a program for automating damn near anything in your life in 2 hours, right? If somebody has an idea for a tool or a website, or just some life task that you really don't want to do or keep putting off, I mean, you can pretty much whip up use Claude Code and automate that. It's ridiculous the stuff you can do right now, and I'm sure a lot of people are delving into it. I talked to a friend in the AI space, and I said, dude, I'm all over Claude Code. It's incredible the things it can do. It totally lowers the cost of entry for anybody into development. Like I'm a developer now, and I have limited coding experience. And granted, it's not perfect code, but for a lot of tasks, you can automate pretty much anything, and it's only going to get better. And so that kind of leads me to the OpenAI time bomb, and you can see that reflected in Microsoft, their stock price getting absolutely walloped. I mean, it doesn't help that Bill Gates showed up in the Epstein files, but Microsoft has just been getting smoked. Biggest investor in OpenAI, and OpenAI is a little worrisome. Not only is Claude Code more powerful at this time, in my opinion, and Claude all in one, there's still the Elon Musk lawsuit, right? That's not just going to disappear. I know Elon's going to continue to fight against OpenAI, and if he demands payment from them or something in the form of money, that's going to hurt. They're already losing money hand over fist, and you can see that reflected in Microsoft's price when it's down 30% from highs, right? That's already a big downturn, but it's pretty much going straight down. It doesn't look great right now. Anthropic passed up on the government contract for the Department of War because what I read is it's effectively the government asked the AI companies, they asked Anthropic first, which should tell you something, to basically do mass surveillance of some sort. And Anthropic said no. I mean, it's an ethics thing, regardless of what it truly was. It's an ethics thing. And Anthropic said no. And then OpenAI quickly said yes. So silly. Microsoft may be up on that because, tomorrow due to that news, but it's silly. They're incredibly, what's the word? Hypocritical. Sam Altman is a totally, he looks like one of the lizard people. He looks super fake. I don't believe a word he says. You can pretty much see it in his eyes. The eyes are the window to the soul, as Cascade once said, or in his song. I think they even said, Sam Altman said in an interview years ago, maybe it was last year, it may have been yesterday, I mean, that ads were his last resort, okay? Ads were the last resort. Now, regardless of what the guy tweets, doesn't matter. He said ads in ChatGPT would be a last resort. We all knew it was coming. We all knew it was coming eventually. And apparently they added a few weeks ago ads on their chat free version of ChatGPT to try to pay for it. Well, yeah, because people in every country are using it, right? Well, when you say something a couple years ago that it's your last resort and then you do it, not a good look. So I think they're losing money hands over fist. They've got too much committed. They're in a suit with Elon Musk. They've already hit their last resort. You've seen Microsoft stock price reflecting this weakness, and I think if OpenAI is unable to go public, which many people expected them to go public this year, I always was saying as soon as OpenAI goes public, that's the top, right? I mean, because that's just exit liquidity. Microsoft wants its money, and everybody just wants their money. They want to liquidate as soon as humanly possible, and they just want out. So I don't even know if they're capable of going public this year. They probably 2027. Go check Polymarket and see. That's where. And also there needs to be legislation for Polymarket and Kalshi and insiders using those, particularly government insiders. And I saw that a congressman or a senator, or somebody is going to propose a bill on Polymarket because apparently right before this strike on Iran, certain accounts were created and people put in millions of dollars betting that there would be a strike on Iran before a certain date, and they profited because of it. I mean, there's way too many insider trades on these things. There needs to be real action. So I'm eager to see what can happen there because Americans are addicted to betting, and not a good thing. All right. What did I leave off? The national debt, number one, huge. Geopolitics, huge. We need to quit meddling. The tariff refunds, the Epstein files, great earnings, good earnings, bad reactions, right? SaaS companies are still getting torched. Right, Claude Code can pretty much do it in 2 hours. The OpenAI time bomb, there's a lot of money wrapped up in that. There's a lot of demand right now. A lot of demand. And supply is trying to catch up, but at some point supply may meet it and the demand may not be there. And whenever that happens, who's left holding the bag, right? Who's left holding the bag? Another thing. New Fed chair. I mentioned this. A lot of uncertainty, right? Who knows if they'll be ideologically aligned with the actual Fed. They're probably going to be ideologically aligned with President Trump, and they're just going to want to lower rates, right? That's not necessarily a good thing. I mean, the labor market is super wobbly, right? Which is a reason to cut rates. But I mean, inflation is not really going away. PCE is edged even closer to 3%, And if we are going to continue to do not QE, which is basically what we're doing, buying CMBS bonds and whatever other bonds, inflation is sticky-ish right now, and the Fed wants it closer to 2%, which is not proving out right now. Unemployment's rising, right? You see, Block has laid off a ton of employees. We're still way above the Fed's inflation target. And so the labor market is obviously going to limit how aggressively the Fed can cut. And that's going to keep mortgage rates high, which keeps a lot of other industries under pressure, one of which being, real estate. I mean, there is a lot to be concerned about in the real estate industry. I mean, CMBS loans for offices are at 12%, 12.3% in January, which is the highest since a certain tracking metric has started in 2000. 1.6%, 1.6 percentage points worse than the financial crisis. So delinquency rates are up. It's basically, there's $900 billion in commercial loans coming due this year. And basically everybody's just playing the extend and pretend game. I mean, it seems like banks are still willing to lend. However, at some point, we have to realize that the assets may not be worth what their loan is. And at that point, the keys get handed back to the bank, and the bank tries to sell it. They sell it for less. And then what happened? Somebody's taken the loss, right? Yeah, almost $875 billion in outstanding commercial loans, which is a lot. It's a lot, but it's actually less than last year. But still, a lot of the things hitting maturity this year are properties that had construction loans in 2021 and 2022, and now they have to refinance or sell or hand the keys back. So if the property's not worth what you built it for, then you're in trouble. So it's definitely, and those who are refinancing are refinancing at a higher rate, an average of 6.25%, up from probably what they're paying, sub 5. So that is certainly something to be concerned about. And I think real estate markets have yet to see a bottom. Yeah, I think that there's a lot to be concerned about. So really, the market only takes one event to kind of make a splash in the bear excitement and kind of make things go down. And eventually, in a year or a month, we'll look back and say, I should have known when the tariff ruling got done. I should have known. I should have known to liquidate everything, right? I should have known when Michael Burry went short NVIDIA and Palantir that the market was going down, right? He did that months ago and bounced around, and people laughed at him. Usually when people laugh at you, that you may be onto something that a lot of people aren't. And if you ask around and you ask your friends, you say, hey, are you buying this dip? I'd probably say that 90% of them would say yes. And that means that 90% of people are going to get caught off guard if this continues to fall. And if it does, do they panic? Potentially. I don't think we've seen any sort of panic yet. And I don't know what the catalyst could be for an uptrend, right? There has to be a catalyst, and there's just way too much uncertainty. There's way too much bad news going around, and the market refuses to make all-time highs. Earnings are good, market goes down. So a lot of individual stocks have been falling. You see Microsoft, you see Amazon, a lot of the big guys. But the market hasn't really followed. So it's kind of a weird place to be in. I think the market follows. What do you think? Let us know in the comments. Please like. I like when people like the videos. It helps. Please subscribe. Please give us a follow at Beyond the Trade on X. And I hope you have a wonderful morning, lunch, evening, and just take care of yourself. Remember, love on somebody. Ask about their day. Focus on somebody else. And let somebody know you love them.